Hey everyone, welcome back. Let's do a recap of everything that happened this week. We're going to do a quick overview of the fundamentals and the technicals. And then we can basically talk about the possibilities of where DXY is headed, which in essence will tell you where the US majors are headed. So, right off the bat, guys, hit that subscribe button if you already haven't. This week we had two big news, CPI being the first. As we can see here, inflation came out higher than expected. So that was the first big news. The second one that hit big is the PPI itself. This is again measuring inflation on both the producers and the consumers. And once again, inflation came out higher than expected. The rest of the red folder news are really nothing too big. Unemployment, it is a big news, but it's not as big as inflation right now. We can kind of see how price has been acting, and for those of you that have tuned in the last few weeks, we talked about these ranges getting created and balanced, and these ranges getting created and balanced, and essentially, one of two things is going to happen. Wednesday is FOMC. Depending what kind of sentiment Powell gives it, the market's either going to continue this way, or the market's going to continue this way. That's all going to basically come down to Powell. My bets right now are that he's going to say the rate cuts are nowhere near. And if the rate cuts are nowhere near, that's basically signifying that price could continue up. I don't want to say that. I want to see what the market does. As you guys can kind of see how fundamentals played out with the technicals this year. The last range is balanced. The path of least resistance would be this. However, depending what Powell says, it could drive it completely the other direction. I would personally prefer the DXY melt. Whether or not we get that, it really makes no difference. So, just to do a little overview. Hold on. So, for our bullish headline arguments, pretty much what we mentioned. CPI came out higher than expected. Monthly core came in higher than expected. And PPI came out higher than expected. Now, remember guys, inflation's a weird one. Higher inflation is good for the currency, bad for the country. So if inflation's high, everything's more expensive for the people. But if inflation's high, it also means their debt's going down. They're essentially inflating the dollar, so their debt's not as bad as it looks. So that's kind of why it's good for the currency. It's a very weird one to wrap your head around. The bearish arguments, I wouldn't really look at any of this stuff too much. These don't really have a lot of weight. The big ones for me are not even retail sales, just these two. So this is also in line with the way NFP came out. So as you can see, the fundamentals created the technical retracement. You could kind of see how it all moves together. Fundamentals come out, technicals make new structures, you would call it. Yeah, there's really not a lot to go over. Euro pairs, same thing. They're not cutting rates before June. Nothing new. Let's check this one out. Let's see. Bank of China, nothing too crazy. OPEC, stuck its outputs. This will be more of an oil thing. Japan, UK GDP. There's really not a lot to go over here. I did want to check one thing out. And let's just look at the institutional position sizing here. And we'll basically just see. Oh, that's neat. Let's actually try it. Let's try it like this. So, just bear with me for a sec. This software takes a little longer to load sometimes. So the stuff we're really looking at is the institutional position sizing. Now these are the leverage funds, which are your smaller hedge funds. Yeah, I would say these are pretty close to being equal. From this perspective, I would say we're Euro USD bullish. The way it works is you would take these shorts and add them to the longs, take these longs, add them to the shorts, since it's Euro USD. From the future perspective, let me see if we can access the, okay, so it's not doing it for us. There's one other thing I was wanting to look at, which is our asset managers. And that'll kind of tell us if the big boys really changed much. So there's another way of doing it. What we can do is just do this, and we'll just swap these out. And this will kind of tell us the long-term trend and position sizing. Remember, these are big boys. This is your pension funds, your union funds, all that stuff. I don't know why, but it doesn't matter. We don't need that. So Euro USD is very bullish long term. This is a 1 to 5 year outlook. So at some point, Euro USD will again be full-blown bullish. When that'll be, it'll be hard to say right now. From our open interest, there's really not a huge difference. Like, these numbers aren't really big enough to matter. What we're really looking for is these flips where it goes from positive to negative and negative to positive. So there's really nothing to be too concerned about. So on a DXY perspective, it looks like the shorts are getting closed out. Compared to the last few weeks, the shorts are going down a lot. So that's definitely a drop. The thing is, though, is the longs didn't really increase by much either. So it's just telling us they're not really shorting the dollar either. So again, this is a lot of mixed reports. For me, I would likely stay bullish on Euro USD and bullish on GBP USD. It's the exact same thing, same chart as we got on DXY. Range is balanced. Expectation would be for price not to break this low and to continue. If price breaks the low, could be a liquidity grab. I wouldn't right away change my bias and still be looking for a continuation. This is all going to come down to Powell. As of right now, I guess we're waiting to see how far the retracement is going to go and where it ends. Price really didn't want to move on Friday. We did short Euro. We also shorted GU. So GU, I think we ended up getting like 2.5 hour on it. We shorted this. We closed at Asia lows. Euro, I think we got like 1.5 hour, and I just closed it out because the DXY hit TP. And also do a trade recap on those. Yeah, there's really nothing to go over this week, guys. It was all pretty one-sided. Dollar gained strength. And yeah, we'll just leave it at that. Get you guys to tune in next Sunday. We'll see what kind of sentiment Powell gives us, and we'll basically go on from there. As of right now, I would just kind of stay neutral and just follow whatever direction the market's going. As of right now, it's pretty simple. From a DXY perspective, just keep buying this until price shows you it no longer wants to buy. And of course, the path of least resistance would be for DXY to continue dropping. Yeah, I'll leave you guys with this. I will see you in the next one.